Welcome to The Prescription, the Tax Policy Center's biweekly webcast on fiscal policy. This is one of a series of conversations with state, local, and federal government officials, as well as leading economists and other experts. I'm your host, Howard Gleckman, a senior fellow at TPC and editor of our blog, TaxVox. My guest today is Katherine Lim. She's an economist at the Federal Reserve Bank of Minneapolis. Before joining the Minneapolis Fed, she was a financial economist at the U.S. Treasury's Office of Tax Analysis. And a few years before that, she was a research assistant here at the Tax Policy Center. She has a PhD in economics and public policy from the University of Michigan. Today, she's here to talk about a paper she recently co-authored that simulated what would happen if the IRS pre-populated individual income tax returns using taxpayer information it already has on hand. Before we begin, just a bit of housekeeping. We encourage audience members to submit questions in the Q&A box at the bottom of your screen. The event's being recorded and will be posted online at TPC's website. We're using captioning that you can adjust or turn off with the live transcript button at the bottom of the Zoom screen. If you'd like to join the conversation on social media, please use the hashtag #LiveAtUrban. And if you'd like to suggest a future guest for The Prescription, just email us at info@taxpolicycenter.org. Katie Lim, welcome to The Prescription and welcome back to TPC.
Thank you. It's good to be back.
It's great to see you. So people have been debating for years whether tax authorities should fill out individual income tax returns on behalf of filers. Proponents argue filers could save money, time, and aggravation if tax authorities pre-populated the returns for them. Critics question whether tax collectors can be trusted to take on this task. You and your co-authors made an important contribution to this debate by simulating what would happen if the IRS did pre-populate returns. So tell me briefly what you did and what you found. We can go into more detail in a few minutes, but give us an overview of what you did and what you found.
Sure. So first of all, I'll say that the comments I make today are on behalf of they're my own. They're not necessarily those of the Federal Reserve System or the Treasury. The paper, I think, makes a contribution to the literature, but doesn't take a stance as to say whether this is something we should or shouldn't do. But what we did was we tried to understand what share of taxpayers for whom the IRS could be successful at pre-populating returns, where success for us was matching what the filer submitted on their own. So we took two approaches to this. The first one we call the upper bound approach. And here we look at the tax returns that people filed and said, what share have failure situations? So we call something a failure situation if there's something on the tax return that means there's no way the IRS could have gotten it right. So an example would be Schedule C income that doesn't match income on a 1099 MISC. So there's no way the IRS could have pre-populated that return correctly. So that's a failure situation. And any tax return that has one of those, we call a failure. And we see this as an upper bound approach because we enumerate 22 of these situations, but it's not every single situation that could happen. So that's the first approach we use. The second approach is perhaps more intuitive. So we actually take filing status and dependent status from the prior year's return and use that information as well as information returns from the current year that the IRS has to calculate tax liability. So actually run it through a tax calculator. We use an in-house version to Treasury of TaxSim. And so we call this a lower bound approach because you could imagine that with more resources, you could get a more sophisticated tax calculator that could be even more accurate. But so with this approach, we're comparing the tax liability from the tax return that the filer submitted to what the pre-populated return would be from the IRS. And so using these two different approaches for the whole tax filing population for 2019, we consider that we're successful for between 42 and 48% of filers. So we think, so we do that. And then we also do a little bit of looking at non-filers, because if you were to think about this regime actually using it, the IRS doesn't know a priori who's going to file and who's not going to file. So they would have to produce a pre-populated return for the general population. And so that's something new I think about the paper as well, is that we look at, well, if the IRS tried to do this for the non-filing population, what would those look like? And so we see that some of them, don't appear to have a filing obligation, but they might receive these pre-populated returns. Some of them might have a refund, so that might be good for them. Some people who do appear to have a filing obligation don't file, and this might nudge them into meeting that filing obligation.
So to put numbers on it, you found that the IRS could accurately pre-populate somewhere between 62 million and 73 million returns. And as you said, it's a bit less than half, between 40 and 48%. So how should I think about that? Is that good news or bad news that the IRS could get roughly half of them right?
So I don't know what I thought going into it. I actually think it's a large percentage when I consider how complicated our tax system is. That's the number that we get within with either no failure situation or we get within $100 of tax liability. So that lower bound of 42%. We have higher success rates among lower income individuals. So there are different subsets, and that's what previous work has really focused on, like different subsets you'd be more or less successful for. And then I also think that even for the people that we're not successful for, the median number of failures that we have, failure situations, is 1. So you might think that it's useful to receive a prepopulated return. The most common failure situation is you had Schedule C income on your filed return and it wasn't right in the prepopulated return. And so you might look at it and say, okay, everything on here is right, but they didn't know about my business and the deductions I have. So I'm going to fill out that Schedule C, and then I'm going to use the rest of this. And so it could be useful to people who are considered failures under this scenario.
So I want to talk to you in a few minutes a little bit more about the different characteristics of taxpayers and your results. But
Sure.
the other thing I thought was interesting was when the simulation missed, you found that the error was pretty significant. Tell me about the magnitude of that. How far off were you from?
I don't know if I have that number offhand. I will say that we were more likely to overestimate liability than underestimate. So around 2/3 of those that we missed were overestimates. You can see in the paper there are, graphs that show that. And the people for whom we really underestimate are the high-end taxpayers. So when you look at overall revenue, I think the overall revenue amount is on the prepopulated returns versus the filed returns is a little bit lower in the prepopulated returns, but it is distributed differently. So I think that's important for policymakers to consider when they're thinking about a policy like this, because we think that there could be this sort of nudge effect, right? You receive this prepopulated return from the IRS, and if it's more likely to be an overestimate than an underestimate for lower income individuals, and those are the people we wanted to help, will they just accept it and not feel comfortable altering it? I think there's a lot of questions surrounding that. We don't have a lot of evidence on that. There was a survey, I think, in Spain of people, how they were thinking about audit probabilities after a prepopulated return type thing. And some of them thought, if I change it, I'll have a higher audit probability. Some of them thought, if I don't change it, I'll have a higher audit probability. So I think people might be concerned about how to approach a prepopulated return that doesn't seem correct to them.
So this is kind of an interesting issue. So as you said, often if there was a mistake, there was only one error. So that suggests it'd be easy for taxpayers to correct that mistake. But would they? And it seems like there's a couple of issues that kind of come up. One of them that you raise is taxpayers with overestimated liability would have a strong incentive to correct the return, but with understated liability, they might just ignore the mistake, keep the money. The other one, which is kind of interesting too, is filers may be intimidated by the IRS and simply accept the error. And we see that with refundable tax credits now, where people just pay the money. But you say it may not be as much of a problem with prepopulated returns. Well, why not?
In terms of them just accepting it?
Yeah, the people might be more willing to kind of make a correction.
Well, I think that really depends a little bit on how it's implemented. So what the messaging and communication strategy would be around that type of return. Like if you receive it and it seems very unfriendly, like this is what we think you owe, then people might be less likely to correct it. There's also this idea that the IRS could point people to, common things that might be wrong that they might want to reconsider. I do think it's a question of how people are doing their returns today. And I can't say I know the answer. 43% of the people for whom we get it right still are using a tax preparer today. So there's nothing to say that some of them might just continue doing that. They might just discard the prepopulated return and say, I don't care about this. I'm just going to go to a tax preparer or fill it out myself using TurboTax. So there's nothing to stop them from doing that. And I think that is one argument that people make to say this wouldn't help people because they'd really just do the same thing they're already doing and then compare it. There's also a question of over time. So I think me personally, if I got a prepopulated return, I'd probably check it and do kind of what I've been doing. But over time, if I found that it was generally matching and generally correct, I might have more trust in it.
One of the older surveys about this, I guess, showed that people, when asked about it, said they might not do it the first year, but they might do it after a couple of years. And it seems
Sure.
like this is kind of the same thing. But let me wait and see if this is working for other people before I use it myself.
Yeah, and I mean, there's some question when we say there's one error. There's a question of how much people understand the tax system. Would they be able to identify the one thing they need to change, or is it more a type of thing where they bring their forms to a tax preparer and they don't really understand what comes out at the end? So that might be more difficult in that sense. Although maybe this would increase people looking at the different lines of their tax return. I don't know.
Let me take you back to the methodology. You mentioned when you described what you did, that you're comparing your simulation with actual returns, and that raises a question that you note, in fairness, in the paper, which is in the real world, filers often misreport income and deductions on their 1040s. You use a tax simulator to double check, but that's the simulators aren't perfect either. So how confident should we be in your results given kind of those challenges?
Yeah, so I mean, the ideal thing would be that we'd be able to do is be able to say, like, this is the true legal liability, and that's going to be our goal. That's what success is. That's not what we're able to do. We say success is matching what the taxpayer reported. I think in some cases, I can't say how many cases because I don't know that truth, but in some cases, the prepopulated return might be closer to that truth than the actual return that's filed. And so it might be a failure, but it might be good from sort of a social welfare perspective. What we found interesting actually was that we found a lot of mismatch between the W-2s that were reported and the wage income that was reported on tax returns. So that was actually a relatively big source of failure for our simulation. And that's interesting because previous work on this has just looked at subsets of taxpayers and said, well, if they have only wage income, then the IRS will be successful. And we're seeing that a non-trivial fraction of them, it's not. And it's not clear. It could be an error in the W-2s and the taxpayer could be right, or it could be that the taxpayer is not right and the W-2s are right. And we can't really say which one is right.
Yeah, it's really interesting. So let's explore that a little bit. So you noted, this is sort of the obvious, that prepopulated returns might be especially useful for those with those simple returns. You projected for single taxpayers with no dependents, only wage income, and only deductions and credits that the IRS can observe. Yeah, as you get right about 80% of the time, and that initially struck me as kind of low. But yeah. I think you may have just described the problem, this mismatch between W-2 income and reported income.
That's the number one. That's the number one issue with that group. Yeah.
Yeah. Interesting. What can be done about that?
I mean, I guess there's always saying, like, we're going to improve information reporting. We're going to improve its accuracy. But yeah, I don't think we're ever going to get to 100% in that group. And I think that's important to recognize, as I just mentioned, that like previous work wasn't able to actually compare those things. So they just kind of assumed that if you had that characteristic, you would be successful. They would be able to prepopulate your return. But I think it goes back to your other question of what is the goal? Is the goal to get what the taxpayer reported, or is the goal to get the truth? And maybe there needs to be some reconciliation using perhaps audits or something to see like what proportion of those is the W-2 right and what proportion of those is the taxpayer right among mismatches.
It's interesting. Years ago, when I was working at Business Week, we used to do around tax season, we'd ask 3 or 4 accountants to review a simulated tax return to find out what the correct amount was supposed to be. And no one ever agreed. And, and it's kind of this existential question, right? What is the right amount of tax somebody's supposed to pay? And I guess the answer is nobody really knows.
Sure, it's hard. I think even with the audit regime, I think the IRS, considers that there's some income or some tax liability that maybe never is found even in an intensive audit. So
yeah. So one of the other interesting demographic things you find was that the simulation is more accurate for younger filers. What was that about, do you think?
I think that's probably related to their lack of dependence and less likely to be married. Probably also less likely to have things like mortgage interest or other types of more complicated things. My guess is if you look at people's tax returns over their life cycle, it's certainly true for myself that it gets sort of more complicated as time goes on.
Life gets more complicated, right?
Yeah.
Yeah. So when you add dependents, the simulation got it right only about 60% of the time. How much of that has to do with refundable credits? You know, I think about the child tax credit, for example, the earned income credit. And for a lot of those filers, the challenge isn't the math. It's often figuring out who should claim the child.
So I do think, so I was looking back at our results thinking about this. Though we do get the child tax credit and the EITC, those lines incorrect. I can't break it down by whether the reason is because we don't have the right children or because we don't get the income right. I think I talked to my co-authors and I think the main driver is that we're not getting the income right? Because but you could say, let's break it down between, do you have the number of kids eligible? And then let's call that a success in some way. Because those are two different issues, right? So, but in the end, you want to get the actual credit right. And so we don't get that right often. And part of that's from the income and part of that's from the eligibility. One interesting thing I think that we did to try to think about this dependent issue, because it is complicated and it is sort of changing over time. We are using the prior year dependents. And you can see the paper for all the details. We had to make a bunch of assumptions about how to say those from 2018, who's eligible in 2019 and for what credits. But we also did a simulation where we said, let's just assume that the IRS knows the filing status in 2019 and knows the dependents. So imagine they had a portal and everyone went in and said, I'm married, filing joint, I have 2 kids, they're both CTC eligible. And it only increased the success rate by like 5 percentage points. So that's something that the IRS could consider, but it might be a lot of work, right? It's a lot of work for individuals to figure out how many dependents do I have, what's my filing status, what are they eligible for? And so asking for that before doing a pre-populated return might not really make sense, but we were surprised that it didn't make the success rates go through the roof or something.
Interesting. So Nita Olson has a question. Of the single no child returns, in what direction was the mismatch? That is, did the taxpayer report more W-2 income than the IRS has on file or less?
There's probably both, but my guess is that the majority are less, which is why we have so much overestimated. It's more likely to be overestimated. But I don't have that exact number in front of me.
And another question from the audience: with the failure situations like the return with a Schedule C income and deductions, did you consider the possibility that would encourage taxpayers to accept the pre-populated return and leave off the Schedule C income that the IRS doesn't know about?
Yeah, so that's obviously a real issue. I do think it really depends on whether the income has information reporting on it, right? So one, if the income on Schedule C is coming from a 1099 miss, you would think that would maybe be the pre-populated return might have too much tax liability, just because you have deductions. If you're an Uber driver, you have deductions for that, and the IRS wouldn't know about that. If it's some kind of thing that's totally under the table that has no information reporting on it, then yeah, that's a concern. So I do think a broader concern is this idea of voluntary tax compliance and the salience and knowledge that people have of what the IRS knows. So I think there's some concern that a pre-populated return regime would be showing the deck, kind of this is what the IRS knows about, and maybe people without the pre-populated return would think somehow the IRS knows about things that they don't, and therefore that's why they report them.
So you kind of get both effects. You get the nudge effect on one hand, and then you get people sort of seeing in advance what the IRS knows and perhaps cheating on the other.
Yeah, and it's partially cheating, but there is some evidence too that it's just, even knowledge. I think in Finland, they started doing information reporting on some sort of deductions, and they found that the deductions actually went up because people weren't reporting these deductions. And when they were kind of on the pre-populated return, oh, I do get a deduction for that, So you might think I don't know, I don't collect all my charitable deductions, so I might miss some, but maybe if they were reported to the IRS and they were automatically populated, I might actually take more deductions. So there's there's sort of the reporting effect, and then there's the cheating effect. There's different behavioral things going on.
So this is a little beyond the scope of the paper, but I'm curious, what would prepopulating mean for timing? Could the IRS receive and process third-party information returns, prepopulate the returns, send them to filers, all in time to make the traditional April 15th deadline? Or would this require some change in the
Yes,
schedule?
definitely requires some change. So right now, information returns do not come in time for the IRS to do that at all. Information returns would have to come in a lot earlier, and possibly refunds would be going out later, because now you can get refunds in January, February. So yeah, there's a big timing issue. That's one thing that we kind of assume away. We assume we have the information returns. We're studying this 2 years later. So yeah, I think that would be a big implementation issue that would have to get overcome. And then, I mean, we didn't talk about kind of what the IRS would need, but this is not something that could be implemented, I think, without a lot of planning and probably resources given to the IRS. This is not something that I think it would be wise at all to say, IRS, just do this, because I think it would require a lot more staff and planning.
And in terms of timing, I think we identified the real issue, which is refunds, right? People are unlikely, I think, to be willing to wait.
Yeah.
Trade the convenience for prepopulation for having to wait a longer period of time to get their refund.
I mean, there's always and maybe that totally is a moot point then, and it wouldn't be helpful. I mean, you could make it optional, because I think in the way we were thinking about the prepopulated returns, it was always optional. If you wanted to throw it in the garbage and do what you're doing now, I think that was thought to be okay. So I don't know. The IRS could say, if you want to submit your own return January, February, you can. And if you want to wait for your prepopulated return that we expect to arrive March 10th, could allow that too. I don't know. That might make it not that useful though.
So you mentioned other countries, and the IRS, the United States is not exactly a first mover in this. There's a number of other countries in Europe and South America that have been doing this for quite a while. Sweden for a long time. What did you find when you looked at their experience? What does that tell you about feasibility of doing this?
Unfortunately, not a ton, just because I think their experiences generally are good. Seems like people are happy. They seem to be relatively, accurate, but their tax systems are pretty different. I think they're simpler. They're individual level taxation, which makes it a little bit easier. There are some countries that have something called a tax agency reconciliation model, where everything gets sort of squared up. There's a lot of coordination between the tax authority and the people withholding taxes, like the employers. I don't think we have that kind of coordination in the US. And that's also complicated by this idea that we have this progressive tax system where the filing status matters. So, employers are trying to get it right with the W-4s, and it's hard, right? Because they don't know your spouse's income or how many jobs you work and that type of thing. So the one experience that might tell us something is California. So California did have this ready return program, but it was very limited to wage earners. I think it was no dependents. They might have had to be single. So the general experience there was very positive among the people who used it, although I think it was only around 20% of people who got this prepopulated return that they actually used it. The other 80% just did whatever they were normally doing. So that tells us that it could be successful for a certain subgroup, but I don't think it's ever been tried in a tax system that's sort of similar to ours.
I was really surprised, actually, when I was preparing for this. I was looking at some of the research, and there's remarkably little research on the sort of the outcomes in a lot of these other countries.
Yeah, there isn't that much. I saw one working paper about Finland that I mentioned, and then I saw one paper about Spain that was kind of a survey about how people were thinking about the prepopulated return. But yeah, I mean, there's stuff talking about it, but not like research on sort of what were the behavioral effects, which I think would be really interesting.
Exactly, or the research like yours about what the results were. Were they actually getting it right or not?
Yeah, I will say Finland, that one paper that I saw, it is a working paper. They said that there were sort of these, effects here and there among different margins. But overall, they didn't see a big revenue effect.
Yeah.
Implementing the returns.
So at the beginning of our conversation, I mentioned the trust issue, and you found that in a significant number of cases where the IRS got it wrong, the prepaid liability was significantly higher than the reported liability. So how does the IRS overcome this?
Well, I guess I would say it's not, I wouldn't think of it as much as like a bill. Like if it's phrased as here's your tax return, this is right, this is what you owe us. That's different than here's kind of like your pre-filled tax return of what we know. Now it's up to you to make it your own. So I think to me, it's a lot of messaging. I'm hopeful that there's some way that the IRS can use the information they have to be helpful and not punitary, I guess. But I don't know. I can't control how people view the IRS.
For sure. So we got another question from the audience, which is, could this be piloted? Given the complexities of the world and others, would it be possible to do it for the IRS to do a pilot?
Yeah, I mean, depending on obviously their resources and whatnot. I mean, the timing of it is a little bit tricky, right? Like we talked about with the information returns. So I think that might make it difficult to pilot in some sense. Although maybe they could do it for people who haven't yet filed, or they could just do it. And if you already filed, then you already filed. That happened actually in California as well. Some of the people who didn't use the prepopulated return had already filed. So I think they could pilot it among a small group of people. And I think that would be a smart way to start because it is a big change, and it would be good to know how people respond to it. And if we wouldn't want to just go to it and then find out like it decimated revenues or it increased revenues by 10% and it made the tax system more aggressive or something. So I always support incremental change.
Mm-hmm, mm-hmm. So Nina asked another question, which is she notes that she's proposed in the past the IRS just allow taxpayers to download W-2s and 1099s that it has on file into software rather than actually calculating the return. IRS actually calculate the return. Is that something that could work? And is it alternative to actually pre-populating?
I mean, I think anything the IRS can do to be helpful, I would be in support of. I think that would be fine if they could download it into software. I think it would be great if the IRS had their own software that was free that people could use.
And the Manchin-Schumer legislation that was agreed to yesterday actually includes a study, some money for a study for the IRS to actually do that, to actually begin to look at alternatives to the free file program, which of course didn't really work out as well as people had hoped.
Yeah, I mean, I think that'd be wonderful. I was shocked by seeing how little take up there was of the free file program, and I think that's a big loss of opportunity to make people feel better about filing their taxes. Like they shouldn't have to pay to do it. They should be able to use reasonable software to help them do it for free if that's what they're legally entitled to.
So let me put you on the spot with the last question.
Sure.
At the moment, the IRS can't even answer the phone. Is it reasonable to expect the agency to take on a complex task like this? And given its many other priorities, where does this one rank? I mean, is this something that ought to be at the top of the list, or did they need to do other things first?
Yeah, that's a good question. I mean, I think it's unreasonable without dedicated funding for this. It probably is not the number one priority given all of the issues that the IRS is facing. But I will say that for all the flack the IRS takes, they have done an amazing job with all the things they've been asked to do with such little resources. If you look at what they did during the pandemic with the advanced CTC, the stimulus payments, like they get asked to do more and more and more. And I don't know how they do it, but somehow they do it. So I'm a big fan of the IRS.
Well, Katie, thank you so much for being with us. This has been a fascinating conversation, and it was a great paper. Let's see if anybody kind of picks up on this and if we actually see some changes.
Thank you for having me. This is a great conversation.
Great to see you. And thank you to our audience for joining us.
Thanks.